Hey guys, Tony here. Welcome back. In this video, we're going to be doing an update on Disney. It's been a good 6 weeks since I started coverage on Disney and told you that I want you to have it on your radar. I do myself, considering where it is price-wise. At that moment, at the end of August, Disney was trading around $83. It dropped to a recent low of 78 and change, but has seen a rally in the last 3 days, closing today at $84.70. I want to go over with you some of the recent news that is causing the increase in price over the last 3 days. News that billionaire Nelson Peltz has boosted his stake in Disney to over $2.5 billion. Plus, we have coverage initiated by Bernstein on Disney at Outperform and coverage initiated by Seaport Global with a buy on Disney. I want to start off this video talking about a lot of the comments I got from you guys, and thank you for your thoughts. Over the last 6 weeks, a lot of you think that Disney has a lot more room to the downside from its current price, and I don't disagree with you. There is risk with Disney. If you go back to my video from 6 weeks ago and look at the green, yellow, red dashboard that I showed you, this is not a company that is all in the green. It's not necessarily a safe play. They have a lot of management issues that still put some risk into trading Disney at these levels. However, what I'm trying to do on this channel is get some good blue chip companies on your radar so that you can start understanding these companies and identify your own price targets. Keep in mind, just because I'm talking about a stock doesn't mean that I'm advocating that you buy it at that price. Always do your own due diligence. More important to me than getting bogged down debating what is the exact right price to buy Disney is the fact that I want to have these conversations with you about blue chip companies, especially if you're a newer trader, one that started trading maybe in 2021, and you've fallen into this trap of buying the retail flavor of the month, which often tend to be companies with either no revenue at all or companies with nothing but a history of losses. I want to encourage you to look for companies that have a long history of revenue growth, a long history of profitability, and look for then in that set of blue chip companies some opportunities to pick up ones that are currently out of favor, so that over a 5 or 10 year period, if you identify and get in these blue chip companies at the right time, you have a very good chance of coming out with some profits over the long term. I understand that some of you think that Disney could fall well below 80 bucks, and maybe it can, right? A lot of what is going to happen with Disney's price is going to be dependent on what happens with Bob Iger and the board of directors and the direction they set for this company in the next 12 months. Can they fix a lot of the wrongs that have been plaguing Disney that has brought this stock from $200 down to $84? We will have to monitor Disney closely and see if they are able to fix some of the fatal flaws that they have in place right now. But let's talk about some of the analysts that recently initiated coverage on Disney. We have here Seaport Global, October 7th. David Joyce at Seaport Global initiated coverage on Disney with a buy rating and a $93 price target based on estimated next 12 months earnings. October 6th, we had Bernstein initiating coverage of Walt Disney with a outperform recommendation. CNBC recently had Bernstein's analyst on. His name is Laurent Yoon. Let's hear what he has to say.
There are 3 reasons why we think Disney is a pretty attractive investment to go through at the moment. So the first one, the overhang that we have on linear is something that the market already expands quite well and should be digested. So yes, the linear decline continues, but it's something that we understand quite well. More importantly, we think that DTC growth and what that would look like with Hulu is likely to be quite optimistic going forward. We expect the DTC to outgrow linear by 2024, and there is a continuing growth prospect, especially in not only the U.S. but also in the international market. So that's our second view.
I want to pause for 1 second for my viewers who are just now getting to understand what is the entire business at Disney, because it is a big one, right? We got TV networks, we got parks, we got cruise ships. What the gentleman was talking about with linear versus DTC is comprised here in what we call Disney Media and Entertainment Distribution. And you can see that from the quarter a year ago to the quarter that just ended July 1st, 2023, it was relatively flat. Now, when we break down the Disney Media and Entertainment Distribution a little bit more and look at the different segments, we have linear networks, direct to consumer, and content sales and licensing. And he was referencing this fall from 7.1 billion to 6.69 billion on the linear networks, and the increase from 5.0 billion to 5.5 billion on the DTC. Linear networks includes cable networks like Disney, ESPN, National Geographic, ABC Broadcast Network, and 8 domestic TV stations. The DTC, or direct to consumer, includes things like Disney Plus, ESPN Plus, and Hulu.
More in the short term, there's a overhang on the stock because of what may happen between Comcast and Hulu in terms of how much Disney will have to pay Comcast for the remaining one-third stake that Comcast owns of Hulu. And we believe that number is something that is more reasonable. And once that overhang is lifted, we believe it'll serve as a positive catalyst for the stock.
Disney currently owns 2/3 of Hulu. The other 1/3 is owned by Comcast, and they are right now working out a deal where Comcast is going to sell their piece of Hulu to Disney. That is why in 2024, Mr. Yoon is trying to explain that he expects the direct-to-consumer revenue to outgrow, and surpass the linear network income, and even offset some of the losses that Disney is experiencing in linear. Other Disney news that has happened since you and I got to talk about Disney back in late August is that at the end of September, you might have heard this, Disney announced the intention to spend up to $60 billion on parks and cruises in capital expenditures. And some of you have commented to me, gosh, that seems like a lot. So I want to share with you what Mr. Yoon's thoughts were on that $60 billion also.
The parks business obviously is a very important component of Disney. You can't really have Disney without the parks component. Today, it contributes over 70% of the firm's EBITDA today. The $60 billion number seems a bit scary, but if you project out how parks will grow into the next 10 years, the $60 billion CapEx actually is somewhat in line with how much they're investing in CapEx today in terms of as percent of revenue. So of course, if you expect the parks business to grow, we would only expect the CapEx to grow accordingly. So, and of course, all the revenue and the EBITDA coming from the parks business supports the media business that is turning the corner. And we believe that DTC, Disney Plus, combined with Hulu going forward, is going to outgrow the linear decline that we've been seeing the past few years.
So we have now covered 4 of the 5 items that I wanted to talk about with you guys that have transpired since late August. The initiation of coverage by Seaport Global, the initiation of coverage of Disney with the Outperform by Bernstein, the investment that Disney announced late September of $60 billion into parks and cruises, and the expediting of the Hulu deal between Disney and Comcast, where they're pulling that in. Now let's close out talking about the $2.5 billion stake that Mr. Nelson Peltz, billionaire Nelson Peltz, has in Disney, and his intention to ask for multiple seats on the Disney board of directors, because this really gets to the heart of why I have Disney on my list of companies to watch. Now, I've talked with you guys both on live streams and some of you one-on-one about my belief that capitalism always ends up beating things like woke agendas, which are ruining a company. And I think that this announcement today by Mr. Peltz, that he has accumulated over $2.5 billion worth of Disney stock, and that he is again demanding some seats on the board of directors kind of hammers home that point. I would be willing to bet that he has some other ideas for cost cutting or selling off pieces of the business as well. Now, you may or may not remember, if you have been following Disney, or maybe you haven't, that earlier this year, Mr. Peltz also made his intentions known that he wanted some seats on the board. And then he dropped that when Bob Iger and the company announced certain cost-cutting measures. He was happy for the moment, but he said if things didn't change, he would be back. He is back. As it says in the article here, the activist investors Trian Fund Management, now one of Disney's largest investors with a stake valued at upward of $2.5 billion, is expected to request multiple seats, including one for Peltz, according to people familiar with the matter. If Disney says no, Trian could nominate directors that would be voted on at Disney's annual meeting next spring. The window for shareholder nominations runs from December 5th through January 4th, according to Disney proxy materials. Now, as of this moment, Mr. Peltz and Mr. Iger have not met one-on-one to discuss if they're going to voluntarily give him some seats on the board. So as things develop, I will get back with you guys and let you know. In closing, Trian thinks that Disney shares are significantly undervalued today and that the company needs a board that is more focused, aligned with shareholders, and accountable. People familiar with the matter said. And I could not agree more. I've been also saying we need a board that is more accountable. And if things don't change, you're going to see one of these big investors come in and demand changes. And here we have Mr. Peltz knocking on the door. Trian has built up its stake in recent months to more than 30 million shares, a significant jump from the roughly 6.4 million shares it held at the end of the second quarter. That is a sizable increase, 6.5 million up to 30 million shares of Disney stock. That is all I got for you on the Disney news updates. Let me know your thoughts on Disney if you have any new ones since we talked last time. I am Tony Denaro. I will see ya on the next video.